Hello friends, welcome to Naveen's Commerce and Management Academy. I am going to discuss you about the accounting. So what is the meaning of accounting, functions of accounting, and what are the various things followed under the accounting process? All those things discussed under this video. Accounting is a process which systematically and comprehensively records business events and transactions. Means accounting is one of the process where we will go for recording the events as well as the transactions. Events means activities performed under the business, and transactions will go for recording means whatever the transactions daily going on in the business, all those transactions will be recorded under the account. So we will call it as a systematic process. Why we are calling it as a systematic process? According to the day-to-day activities will go for recording the transactions, so we are calling it as the systematic process. And the translate into the financial information means all the financial aspects will be present under the accounting records. Here under accounting, the transactions are identified, recorded, arranged and summarized. Means first we'll go for identifying what are the transactions we are happening in the business organization. After identification, then we'll go for making the recording of all the transactions. Once the recording has been completed, then we'll go for having the arrangement of all the transactions. Then we will summarize all the arranged transactions, and then we will simplify properly and communicate it to the interested parties. Means all this is the process happens under the accounting. Means first identification, recording, arranging, summarizing and simplification. Once all these steps has been completed, then the information will be communicated to the interested parties like management and government and other people related to the particular organization. And for accounting process, we are having certain principles. Those principles are called as generally accepted accounting principles. In short form we'll call it as a GAAP. So generally accepted accounting principles provides rules for the preparation of accounting statements. Means these principles provides the rules, means how to prepare the accounting statements. Here we are having different types of accounting statements like journals, ledgers, trial balance, profit and loss account, balance sheets. All these are the various accounting statements. So here the generally accepted accounting principles, they will provide the rules for the preparation of accounting statements. Means what is the format should be followed and what are the items should be recorded in each and every type of accounting statements. Like that every rules should be given by the generally accepted accounting principles in the form of concepts, conventions, assumptions and principles. By giving these rules, they remove the confusion. Not only confusion but also provides the consistency in the accounting process. Functions of accounting. Systematic record keeping. The first and foremost function of accounting is systematic record keeping of financial transactions. Means day to day whatever the financial transactions are happening, all those financial transactions will be recorded on a regular basis. So it will be the systematic record keeping. And second one is facilitating rational decision making. Means as we are preparing accounting statements related to financial transactions, once the accounting process has been completed, we will go for communicating the information to the related people. So this will help the people to take the decisions regarding the various aspects. And legal compliance. The accounting statements must be prepared keeping in mind the compliance with the relevant laws. Means according to the rules and regulations given by the government or according to the various laws prevailing in the environment or economy, according to that we have to go for preparing the financial statements and determination of profit and loss. By preparing the financial statements or accounting statements, we can also determine whether our company is getting a profit or loss, and we can also ascertain the profitability, liquidity, and solvency of the entity. Single entry system, it is the oldest and most straightforward method of keeping records of financial transactions. Means it is very oldest system of recording the financial transactions in business organizations, and it is a straightforward technique of recording the financial transactions. But in today we are not at all seeing the single entry system. It is very rarely prevalent in these days, and in the single entry system we can see only one side recording of the transactions, because there is no rules or prescribed principles present for the single entry system, so there will be only one side recording of transactions. Because of the absence of prescribed rules, the records maintained are more or less incomplete. Means because there is no prescribed rules and guidelines for the single entry system, whatever the transactions recorded under single entry system, they are incomplete in the nature. Double entry system. So due to the limitations of single entry system, the double entry system of recording accounting transaction has been established. Here under double entry system, it is a dual aspect. Means for each and every transaction there will be two accounts should be maintained. One account should be debited and another account will be credited. So means if you are having any particular transaction in a business organization, for that particular single transactions you will be having two accounts, that is one should be debited and another one will be credited. In these are recorded, these two accounts are recorded in the journals. Bookkeeping can be defined as a system of keeping records. Means under bookkeeping will go for maintaining all the records, so it is called as a system of keeping records. And under bookkeeping will also go for classifying the financial transactions on the basis of day to day. Means whatever the financial transactions you are getting each and every day, will go for classifying all the transactions according to the day to day basis, according to the business operations in a sequential manner. And here the term transaction refers to business activity. Means whatever we are saying financial transaction, in those financial transaction, a transaction refers for the business activity. In this business activity, exchange of money or money worth of goods and services will be involved. Bookkeeping is the initial step to the accounting process. Means the first and foremost step in the accounting process is bookkeeping, where through bookkeeping we can go for getting the preliminary information required for the preparation and maintenance of the accounts. So hence accounting is based on the proper system of bookkeeping. And bookkeeping involves gathering basic financial data, identifying the transactions and events with the financial aspects, measuring the transactions in monetary terms, keeping a record of financial effect of the transactions, classifying the effect of transactions, preparing statement. Methods of bookkeeping. There are two methods of bookkeeping. One is manual bookkeeping and another one is the computerized bookkeeping. Manual bookkeeping, it is a conventional or traditional method of bookkeeping which involves manually writing the transaction. Means whatever the transaction happens day to day basis in the business organizations, all those transactions will be written by a particular person in the books. And the second one, computerized bookkeeping. With the introduction of computers, nowadays each and every activity is carried out through the computers or laptops. So again here bookkeeping is also converted into manual to computerized bookkeeping. All the transactions, financial transactions of business, whatever happening daily basis, all those transactions are recorded under the computers. This is called as computerized bookkeeping. There are certain rules for accounting. They are called as golden rules of accounting. Means, as we already said, in the double entry system, we will be having two accounts for each and every transaction. One should be debited and another one should be credited. So what are the rules should be applied for debits and credits? So those are called as golden rules of accounting. So here the accounting are classified into three types of accounts, that is personal account, real account and nominal accounts. Personal account. So what is the meaning of personal account? Personal account means the account that deals with the persons or human beings or artificial persons such as companies. All these are called as the personal accounts. Means if you are dealing with a particular human beings or if you are dealing with the companies or government or any organizations, all those things comes under the personal accounts. And real accounts. Real accounts are related to the assets which are tangible. So means a particular assets like furniture, building, goodwill, patents, intellectual properties. Either it may be tangible assets or intangible assets. The accounts which are related to assets, they are called as a real accounts. And the third one is nominal accounts. Means the accounts which are related to expenses as well as the incomes. We will call it as a nominal accounts. Example, rent paid, rates account, traveling expenses paid, or commission received, interest paid. Such all expenses and incomes, the accounts are called as the nominal accounts. And what are the golden rules applicable for these three accounts? First one is personal account. In case of personal account, we have to debit the receiver and credit the giver. Means the person who is going to give the amount will write it in the debit column, and the person who is going to receive will write in the credit column. So the rule of personal account is debit the receiver and credit the giver. And the second one, real account, debit what comes in and credit what goes out. Means real account is related to assets. So debit what comes in. For example, if you are purchasing machinery for 5 lakhs, so machinery is coming into the organization. So in the debit column, we will write it as a machinery account. And credit what goes out, cash is going out. So in the credit column, we will go for writing it as a cash. So under real account, whatever comes into the organization will show it in the debit, and whatever is going out from the company will show in the credit. And nominal accounts, in case of nominal accounts, in the debit column will show all the expenses or losses. Whatever the expenses you are making, or if you occur any losses, that will be shown on the debit. And in the credit, all incomes and gains, whatever the incomes you are receiving, whatever the gains you are receiving, you will go for writing under the credit column. This is all about the basics of accounting. Hope you all understood about the things explained in the video. Stay tuned for my channel for more and more updates. Thank you.